Good evening and welcome to my daily war and markets review. This is Monday, the 25th of May, and a good, nice day for the markets with news coming on the geopolitical front of a potential 60-day ceasefire and talks progressing well, which led to a sharp 5% drop in the price of Brent crude to about the 97, 98 levels, accompanied by a strong 50 basis points recovery in the rupee to 95.23. And just a few days ago, we were talking about it touching 97. So obviously, RBI had been intervening strongly over the last few days, but today the drop in Brent crude obviously gave it a nice fundamental fillip. So this naturally reflected in a huge relief rally in the markets, and almost every index and every sector ended in the positive. The Nifty, the small cap index, the micro cap index, all were up about 1.3, 1.4%, and the mid cap index was probably slightly less at around 1% rise. The advanced decline ratio was 2 is to 1, with more than 2,000 stocks rising and only about 900 stocks falling. What led to this rally? Well, you would have thought that the good news on the geopolitical front with oil coming down below 100 would be welcomed by all participants. Yes, but not in equal measure. Why do I say that? Well, rolling it back, a 2 is to 1 advanced decline ratio clearly says that retail and HNI participation was very positive. The DIS stepped in with almost 4,000 crores of buying. So obviously they reacted positively to news. What about our dear friends, the FIIs? They also turned positive, but only for a measly 800 crores. Now you'll say, why am I saying measly 800 crores? Well, obviously, FIIs have much greater pulling strength, and I would have expected on that such a day of good news, they would have pumped in a lot more money into India. Why they did not? Well, we'll have to wait and see that. But still, let's not, unnecessarily look gift horses in the mouth, because from selling 3 to 4,000 crores a day to coming to positive itself is a big sign. But that being said, what sectors rallied today? Well, clearly the upshot of this oil price decrease, rupee strengthening, easing geopolitics led the domestic investors into the thought that, which was slowly creeping into the mind over the last week, 10 days, that RBI might do a rate hike. So clearly, such a move dispelled such a notion. The market was relieved that now it could be either a neutral RBI with an accommodation outlook or perhaps a cautious RBI, but not a rate hike. Though there's still no move towards a rate cut, I would suspect, given where inflation is heading. But then why did the FIIs not jump up? Well, the point is that even at $98, which the oil market reflected the easing geopolitics, Indian economy is under pressure. Many people ask me today, so has this improving oil, does it mean that the petrol price hike will be rolled back? Far from it. We were at 65 to $70 pre-war, and that's what had been baked into our GDP, our fiscal deficit, and all of our projections. So obviously, even if oil settles at 98, 95, whatever, it's still way above the what the Indian economy can afford and absorb without affecting normal lives. So I don't think that it's strong enough. It's a sentimental move towards that. And the market's reaction in sector wise reflects the relief of the domestic around the RBI rate policy, because it was the rate sensitives which led the rally, which is the banking sector, both private and public sector banks, auto, realty, consumer durables, the defense. So, and oil and gas, of course, because the refining companies obviously benefit from a drop in oil prices. And but then it's every other sector ended in positive. The only one in negative was FMCG. But those which are less positive, just about 20 to 30 basis points, were pharma and IT. Naturally, because of the fact that a strengthening rupee, it doesn't aid to their earnings, which a depreciating rupee was helping them recover last week. So now again, let's think about it in terms of, since the FIs haven't come back in strong measure, is this rally sustainable? How is it going to go forward? So then, two, three things we have to bear in mind. Like I said, this rally is still a hope rally. Why do you say that? Mr. Trump himself has cautioned people, saying that no, no, we are not close to a solution. I've told my team that we must get a perfect solution rather than rush a solution. So while talks are on at the ground level, Mr. Trump is still not jumping with joy. Second aspect to it is that he's now dashed off another one of his Trumpisms, a letter addressed to all of the Middle East countries saying that please sign the Abraham Accord. Now, what is this new googly of the Abraham Accords? Abraham Accord was basically signed between a few countries and Israel, and Abraham being the common kind of ancestor, accepted as an ancestor officially by both the Muslims as well as the Jews, right? Saying that we would be negotiating and doing trade deals with us, but we'll keep the Palestine issue on the side. And lots of countries like Saudi Arabia, etc., haven't signed up for the Abraham Accords. So he's now putting pressure on them for this deal to say that this deal is going to benefit everybody, you better sign up the record. So I'm not sure that what is the need to bring this in when his core focus has to be to stop the war. Domestic politics is not helping him. His popularity is going down. He's need to bring the war to a close and a conclusion, declare victory in some sort, and go ahead. But it doesn't look like he's in that mood yet. So I think oil, I think after going down below 97, I see it now come to 98. So there is that till Mr. Trump is active and unless we have a signed, dotted, and sealed document, I'm not sure that really everybody is going to breathe easy, and that's reflecting. I noticed the GIFT Nifty now slightly slipping into the red today. Tomorrow is also the option expiry day for the National Stock Exchange, so there will be volatility surrounding that. So, like I said, I think today was a relief rally. It was great news on the geopolitical front, leading to the thought process of the RBI. But let's not jump in to say that it's turned the corner. Where is oil ultimately going to settle? When is the war ultimately going to end? All of these will play a role on whether today's rally was sustainable. I'm not about to sit and predict that there will be correction tomorrow or a bounce tomorrow. It's every day for that day based on what comes out of Trump's tweets, what comes out of. The only thing is that I would say is that's positive for me is that Iran officially responded, at least in partly, to say that they would not be charging fees on the Hormuz Strait usage, though they have countered it by also saying that some service-related charges will be there, which could be recovered from the vessels passing through. And they've also clearly said they don't want anybody else interfering in the Hormuz Strait other than the states which actually have a border, maritime border along the Hormuz Strait, like Saudi Arabia, Qatar, and them. But at least it was some part way move. The clear thing which has not been resolved is, of course, the nuclear enrichment facilities and what happens to that. So let's wait for that. Let's not jump and do anything to change our investment strategy of accumulate, stagger, and diversify, right? So anyway, let's celebrate a good day, a great relief. And I'm sure that all those who have been putting in small amounts into the market would feel their portfolios will look much better today. Thank you and look forward to my next update tomorrow.